Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Morning on a Tuesday, and we will start with US equities, which rebounded to finish higher yesterday, driven by gains in technology and energy stocks. The S&P 500 rose 0.4%, while the Nasdaq 100 advanced 0.7%. On the trade front, a call between President Trump and President Xi Jinping to discuss a deal is most likely to take place this week. In the meantime, economic uncertainty remains elevated, with data showing that US factory activity contracted in May for a third successive month, and the gauge of imports fell to a 16-year low due to the impact of tariffs. Elsewhere, the VIX dropped for a third day. The dollar index is knocking at the April lows. The 10-year treasury yield is barely holding on to 4.4%. Gold jumped 2.8% in what was its biggest such move since early May. It benefited from an escalation seen over the weekend between Russia and Ukraine, while oil prices gained due to continued decline in the dollar and the geopolitical flare-up. At home, the rupee rose to 85.39 on overall softness in the dollar against Asian peers, even as data showed that India's manufacturing activity slowed to a 3-month low in May. Coming to stocks, the Nifty finished 34 points down at 24,716, but not before recovering nearly 200 points from the day's low. The India VIX jumped 6.7% on the day in what was its biggest such advance since May 8th. The NSE 500, small cap and mid cap indices all finished higher. Gainers slightly outweighed winners on the NSE 500 as 56% of its members rose. 9 of the 12 main NSE sectors finished up, with Realty and PSU banks gaining 2.3% and 2.2% respectively. IT stocks were the biggest drags as they dropped 0.7%. The best and worst performers on the Nifty were Adani Ports, which rose 2.5%, and Hero MotoCorp, which fell 1.8%. Technically speaking, yesterday's rebound raised a candle with a long lower shadow, whose close was above the open, besides keeping critical support at 24,462 intact. The 24,462 to 25,116 area will continue to remain in focus going forward, with near-term resistance sitting at 24,820 followed by 24,893. The next important time window runs from 10th June to 13th June, where a potential trend change may be seen. Meanwhile, provisional data show that foreigners withdrew nearly 2,600 crores yesterday. On to derivatives now, and the Nifty's put-call ratio went from 0.77 to 0.82, while the bank Nifties remained flat near 1.04. Puts added were more than the call additions seen on the Nifty, and at the money implied volatility fell nearly 30 basis points at the close, which meant that on a net basis, market participants finished the day optimistic. Options concentration for the 5th June expiry showing a trackable range of 24,500 to 25,000 for today, with the highest additions seen at the 24,700 strike for calls and at the 24,500 strike for puts. Note that we have ignored distance strikes that are far out of the money. Volatility analysis shows that the demand for 1% out of the money puts was higher yet again than for similar distance calls, which means that volatility traders were hedging against potential downsides. Speaking net index options activity, foreigners and retail investors were bearish, while prop traders were very bullish. Elsewhere, foreigners' net short positioning in index futures rose to nearly 89,000 contracts from 83,000 contracts in a fresh build-up in bearish wagers. Looking forward to today's session, the GIFT Nifty opened about 100 points higher. Asian markets were slightly in the green. US index futures were down about 0.2%. Coming to stocks, Chennai Petroleum, Ashok Leyland and Kaplan Point were at horizontal support, while Motherson Sumi and Sri Renuka Sugars were at horizontal resistance. Adani Energy Solutions, Alchem and Ashok Leyland were at trendline support, while Bank of Baroda and Lemon Tree Hotels were at trendline resistance. Talking breadth, 81%, 78% and 50% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. Durable goods orders and factory orders are due later today from the US. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Take care and have a good day.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.